Are you wondering how to determine continuing values for your firm? In this video, we will look at how to calculate continuing values for our firm using the formulas in our spreadsheet. For the discounted cash flow model, the formula for calculating continuing values in our spreadsheet is this. And in the economic profit model, where G equals the expected growth rate in operating income and RINOA equals the expected rate of return on incremental net operating assets, that is, on new invested capital in the future. These continuing values are perpetuity-based formulas with constant growth, constant margins and asset turnover, resulting in constant return on net operating assets in the future, and constant weighted average cost of capital. Both continuing value formulas make explicit the assumptions about RINOA, the expected rate of return on incremental net operating assets, i.e. on new invested capital, invested after the forecast period. Although the continuing value differs between the discounted cash flow and economic profit models, the value of a firm will be the same with either model, given the same projected financial performance. Under the economic profit model, the continuing value formula is the present value of economic profit in the first year after the forecast period in perpetuity, plus an incremental economic profit after that year based on additional investment in net operating assets at returns exceeding the cost of capital. If expected return on incremental net operating assets equals the weighted average cost of capital, then the second half of the continuing value formula for the economic profit model is 0, and the continuing value is the first year's economic profit in perpetuity. There are a few traps in selecting continuing value scenarios. A key trap is to assume the past will continue indefinitely into the future. In the case of Ryman Healthcare, other competitors could be expected to enter their markets. Customer acceptance of the sale of occupation rights might change, perhaps stimulated by competitor behaviour. And the market for retirement village units may one day become saturated and the opportunities for future growth reduce. Another trap is to fail to carry out sensitivities in our calculation of a firm's continuing value. We should conduct sensitivities over a wide range of possible scenarios. We can use pivot tables in Excel to help us do this. This will help to give us a feel for the possible valuation ranges for a firm based on changes to the primarily speculative elements of our valuation. For example, we could run a set of sensitivities on the growth rate we use in the continuing value. Forming considered and well thought through views about the appropriate growth rate to use in our continuing value is important. It can often be valuable to discuss issues around a firm's appropriate growth rate with others, and with thought and analysis going into this as best we can. For Ryman Healthcare, there may be some useful long-range forecasts for residential property values or other economic data that we might find useful in thinking about what might lie beyond our forecast horizon for Ryman Healthcare and how best to handle our calculation of a continuing value. We can also complete various sensitivity analyses concerning our forecasts of abnormal operating income, changing our forecasts of sales, asset turnover and profit margin and other factors to gauge their effects on our view of the value of a firm. For example, we could run sensitivities for Ryman Healthcare with different forecasts of residential property values and with different property revaluation forecasts, and with changes in the forecast level of sales of occupation rights. Such an analysis would show that our economic profit valuation of Ryman Healthcare is highly sensitive to changes in our forecasts of residential property values and somewhat sensitive to our forecast of sales of occupation rights. This suggests we should put effort into our forecast of residential property values, as our judgments around this factor will have a significant impact on our assessment of the value of Ryman Healthcare. For further information on how to determine continuing values in practice, go back to Chapter 7, Section 7.2 in the study guide, and also review the How to Predict the Future to Eternity weekly questions. Also answer, write and rate questions on how to predict the future to eternity in Peerwise.